guys, Darren here. Thanks for joining the Stock Option Market Weekly Update for the week of April 29, 2024. Today we're going to talk about where we are in the S&P 500 year to date and what it looks like going forward, as well as the economic data that came out last week and is coming out this week. Then we're going to jump into the different sectors and how they've performed year to date, and we will jump into the live trades on the option trading platform after that. Before we get started, if you appreciate the time and effort that goes into making these type videos, if you can do me a favor and hit the like and subscribe button, it really helps out the channel and I appreciate it very much, so thank you. I think it's super important that we understand all the different strategies that the rich are using to get richer. Then we can use those same tools and strategies to profit for ourselves safely in any market. Be sure and download the free options workshop in the link below. It talks about the two main benefits of trading options over buying stocks. We also have a paid course that is very reasonably, inexpensively priced if you're interested in digging into options in depth. Use the link below and open an account with Moomoo. You can get 1.5% cash back or 7 free fractional shares of stock for opening an account with just a $1,000 deposit. You really need that in order to make a few different trades anyway. Disclaimer, I'm not a financial planner and I'm not recommending trades. Please do your own research, and if you're new or learning options, I recommend you start small. All right, guys, let's see where we are in the market year to date. Well, actually, this is last week. So this is on the 5-day chart here on TradingView. And you can see we started the week at 49.67 and we ended up at 5,099 right over here. So slightly up last week, not too much, actually pretty flat. We're up around 8% for the year. If we look at the yearly chart, we started at 47.43 and again 5,099 is where we're at today. If we look at the economic calendar and look at what is coming out this week, we've got on Thursday, we've got the jobless claims, and Friday, the unemployment. So pretty much employment numbers. We've got 250,000 jobs expected, or employment rate of 3.8%. And as far as initial jobless claims on Thursday, 210,000. As far as interest rates go, we're still looking at, it looks like September, it's almost even whether there's going to be an interest rate cut. We're at 5.25 to 5.5 right now. There's a 43.8% chance, so slightly higher chance that we're going to get a quarter-point interest cut down to 5 to 5.25 in September, and a little bit higher, lower percentage in November. But yeah, the Fed's been saying higher for longer, so that interest rate cut, we're still waiting for the inflation numbers to settle down and keep that under control before Jerome Powell makes an interest rate cut. If we look at the FactSet Earnings Insight Report, oh, actually, you know what? Let's go back. I missed next week's, or last week's. So last week we had GDP numbers on Thursday morning, and they came out 2.2 expected. It was only 1.6, so a little bit lower in GDP. And then we had the PCE that was 0.3 expected, and it came in at 0.3. Core PCE year over year 2.8%, so still a little bit high, but somewhat in line with the 2.7% expected. So now let's jump into that FactSet earnings report, and we can see that right now Q1 2024, the earnings growth rate's 3.5%, and that is actually better than it was prior. It's up a little bit over what it was last week. So the earnings that came out last week were actually pretty good. We are at a 20 PE now. Since the market did move up, we're at 19.9%. last week, but 20 PE. So that's the price to earnings ratio for the S&P 500, and the 10-year average is 17.8. So we are a little bit above that rate right now. So that says that the market still is a little bit pricey. If we look at page 16 on the report, actually it's 15, we can look at next year's numbers. And for next year, we are actually for Q2, not next year, but next quarter, Q2, 9.7% earnings growth expected and 4.4% revenue. And for calendar year 2024, earnings growth rate of 10.8% and revenue of 4.9%. So numbers are expected to do well. And for 2025, this is next year, earnings growth of 13.9 and revenue of 5.8. So that's up from last week. Last week, that 13.9 was actually 11.6. So a little bit more promising moving ahead. And I'm not going to jump into the forward-looking PEs, but energy, utilities, and real estate are still undervalued right now. And then if we jump into the different sectors, last week, again, we were up, but basically all the sectors were up last week. And really with technology and consumer discretionary leading the way. And then year to date, you can see everything's up except real estate and consumer discretionary. And communication services is really up along with energy. I think with the geopolitical issues and the war going on in the Middle East, energy really spiked last week. And the Fear and Greed Index had come down on pullback a few weeks ago. It's down to 42. So, a good time to probably be in the market somewhat. So let's jump into the trades on the trading platform. And the first one I have is oil, and this is crude oil. I don't normally buy options, but I bought an 85 call. We had a little bit of a move up last week. This is the 5-day chart. So you can see a move up last week. That helped me because I took a big hit. It looked like the war was maybe going to escalate. And so as protection, I bought some crude oil and kind of backfired. I'm down over $2,000. So let's hope that comes up like it did last week and keep going so that I can make some money on that trade. Airbnb, actually love this company. They last quarter were doing really well, and they've got earnings coming out. You can see here I've got set up on the Tasty Trade platform earnings on 5/8, so it shows the earnings date that is happening. So that's coming out not this week, this coming week, but the week after. And I expect them to do well, but I've just got a 160, 155 put option. And, we haven't traded this a lot. I think over the last year, yeah, we've made $377 in Airbnb, and that's pretty much staying long. If we look at what I've got on right now, if I go to the curve mode and then analysis, you can see we're profitable above 160. We collect the full amount of extrinsic, which is $187 on a $5 wide, so a little bit more than a third the width of the strike that I'm looking to collect on this put credit spread. And after earnings, if they do well, if the guidance is good, then the stock will likely do well and we'll collect most of this premium. And I'll probably roll out to next month because my target is it's actually right around where my target is. So I don't know, I might just close out. Adobe, this one's been tough. 485, I rolled down my calls. My target for Adobe is much higher, but it hasn't been working out. So I think the AI, I don't think it's going to affect the stock. I think long term it's great. I would definitely be long Adobe. I think it's really moved down, but it did move up a little bit last week. That helped us out. I've got a really small profit window between 480 and 490 now, but I'll look to close that out because IVR is low and we're at the 19-day mark. So I'm going to probably close that out and stay out of Adobe for a while. It hasn't done well and it doesn't look like it's going to going forward in the immediate future. AMD, love this stock. It's down. Tech took a big hit a couple of weeks ago. It improved last week, but it's been down. My target for AMD is much higher. It's like a $200 target, but you can see where it was up last week, and we're profitable as long as we stay above that 175. But we're down right now, so I'm going to need to roll this into June, and I'll look to do that next week. Actually, we've got earnings 4:30, so um, that is Tuesday after the bell. So Tuesday I may put on another one because it's been down. And AMD again, we've got recently heard on the drop, but I like it long term. Uh, Amazon, I put this trade on not very long ago, and because they're a behemoth and going to do well, they've got earnings as well on Tuesday after the bell. Um, we are at 170, 179. So again, it's a put credit spread. We're profitable as long as it stays up in this range. So it can even drop a little and we still collect that full $127 left in premium. We've already collected 23. But I like Amazon and I may put another one on before earnings. DraftKings, this one actually has done really well for us. It's kind of been a money printer for us. My target for DraftKings is 50, so we're below that, but we've been collecting. We've got a long-term leaps option and then a call that we wrote against it. So it's a poor man's covered call, and just in the last 30 days, I think it's done pretty well. Yeah, $1,426 just in the last 30 days that we've made on DraftKings, and it should continue to do well. Online gaming is doing really well. So we've got ESPN bets, that's competition, and so there are a few companies out there that are competition, but DraftKings is doing really well as well. And Google, actually they had earnings and their ad revenue was down last earnings before the most recent one that we just had, but they beat on the top and bottom lines, and I closed and rolled from May to June. So we did really well last 30 days, $843. And you can see where I closed the May 150, so we had a $15 wide, 150, 135. And we rolled to June, and I did the 160, 150, $10 wide, so shortened it up and collected additional premium. So we are profitable as long as we stay above that 160 mark, which my target for Google is 180 to 200, so quite a bit higher. We're going to stay long in Google. L3 Communications also reported and did really well, and it jumped last week. You can see where it jumped pretty big, all the way up to 214. We had a put spread on, and at 210, I closed out May and rolled to June, and we're 326 in the last 30 days in L3, and we've been doing well all year in L3. In the last 186 months, we've made $1,547. So L3's been pretty good to us. I'm going to stay long in L3. My target's 240. Netflix, I put this one on last week, and I did it after earnings. It does move a lot on earnings, so sometimes what I'll do is I'll wait and I'll put it on after earnings, but you can see there was a big drop, and that's when I put it on because there's a drop for a reason, and for the same reason that it dropped. It's probably not going to skyrocket back up. And it's already baked in because it dropped. So it's not going to drop a lot further. So after earnings trades, I really like. And Netflix we've done really well in. And now we're centered because we've already had earnings. No earnings date here, you can see. And, we've done really well. Netflix Iron Condors, we've been killing it. In the last year, yeah, over $3,000 in Netflix that we've collected in premium, selling options, selling Iron Condors. ServiceNow had earnings, and I mean, this company, I think they're great. They're a cloud-based platform that really helps out customers with AI. They do really well in government as well as restaurants and banking. And their expectation or their earnings were good and their revenue, but the guidance, I mean, they've been growing like crazy, but I think it dropped after earnings. Yeah, big drop. So I actually rolled from, oh no, I didn't. I left my May on because I didn't think it would drop further. And we had such a wide iron condor on that we were still above our strike. So yeah, we're still here in the profit zone. So as long as it stays above $700 and it's at 723 and it's already taken a big hit, then we will collect this 245 that's left in extrinsic. And yeah, we're doing okay. Just in the last 30 days, we made over $300. Oh, because I had one on prior because this expired right before the earnings came out. So we made $285 on that Iron Condor. And then you can see I put on the put spread afterward because after the drop and the company expected to do well going forward, I'm not too worried about the downside, and I'm just playing it to the upside. I think it could exceed. If I put the call side on, I wouldn't want it to get, to lose money on that side because I think it's already taken this big drop. Nvidia is another one. I rolled out to June, 785, 775. I closed out a little too early because on Friday it jumped big, $50. They've got earnings coming up May 22nd. We make money. We've got a lot of room to move down to 780. But Nvidia's, an awesome company, huge in AI, leader in GPUs, and they had a new GPU that came out that is great performance and low power. It dominates in the market, and the PEG, the price to earnings to growth, is extremely high in Nvidia. So I'm going to stay long Nvidia, especially at these prices. UiPath, this is a cloud company as well. High flying tech. They do software for robotic process automation. So to me, that's a no-brainer. Robotics is going to continue to do well and going forward. So I've got a poor man's covered call, a Leaps with a call that we sold against it. Don't have a lot of history with this yet, but the stock's been around 19 last week. Yeah, it stayed pretty flat. Palantir, same thing, a Leaps option. They've got earnings coming out on 5/6, so the week after next. And we've done pretty well in Palantir, but they're a monster going forward. In the last 6 months, $686. But I'm going to stay long Palantir. I may put another one on prior to earnings on May 6th. May buy a Leap or sell a put. PayPal, 65.60. Their price is at $68. Last week did move up, and I like PayPal for a fintech going forward. They've got earnings on April 30th, so that's Tuesday before the the bell. So any pre-earnings trade you'd want to put on Monday sometime near the end of the day, and then Tuesday morning it will open up, and that's where the IV will drop. And if you're right on direction, or if you place a neutral trade and it stays within your profit zone, then all that premium, a lot of it's going to come in on Tuesday. SoFi, long, leaps options, and I love this fintech. They've been profitable. They've got earnings next week too, as well on April 29th. And I'm going to stay long. And you can see these are really long-term leaps options. I don't even sell calls against them because I like SoFi so much moving forward. SPX, I'm going to do a separate video on SPX. So I've been trading. I normally sell options except for leaps. I'll buy leaps, out past a year, and then I'll sell premium on all of this portfolio, except the new strategy that I've been working, the 0 DTE SPX options. I buy options. So I buy calls and puts, and I'm going to do a video. I'm trying to do it every week. I've done the first 2 weeks that I did the video and showed my trades and my strategy. I made money both those times. Won, I think, $1,600 the first week, and then $2,400 the second week. Last week, I lost. So you'll see the video coming out on that. But what really happened is I didn't follow my strategy and wasn't disciplined. But you can see when that happens, you can get hurt. And I lost, I think, the $1,600. So I'm still up overall in SPX, but if I would have made the right trades and just followed my strategy, I would have made money. My goal is to make around $2,500 per week. So times 4 weeks, that's 10 grand a month in extra just trading short-term 0 DTE SPX options. So keep your eye out for that video. I'm actually going to make that one right after this one. So that's SPX, and then Square, we've got earnings coming out 5/2, so that is this coming week. And we've got the 77.5, 72.5 put credit spread. IVR is high right before earnings, so you can sell premium and collect good premium. We're up 119, but we are below our short strike. Interesting. We're down here, but we're still up. But we've done okay in Square, $360 over the last 6 months. But we'll see how earnings come out. I think they're going to do well. I think the CEO, I have a note that he was on Jim Cramer's show. I like to watch that and get his input. He's sometimes right, not always right, sometimes wrong. But the CEO sounded very confident, and they're going into earnings. So I think that they're going to do pretty well. So I may put another put spread on prior to earnings. TLT and TMF, higher for longer with the interest rate cuts. That should do well when the interest rates come, actually like 90 days before that. But I'm a little early on TLT and TMF. I lightened up my position. I took 1 leaps of each one off. And I'm going to wait since we're still, there may not be an interest cut this year. They're saying September or November, but, it could go into next year. We'll see. So I'd like to keep that on to watch, but I'll add as we get closer to an interest rate cut because they are at all-time lows. Verizon has been just a solid company, pay a huge dividend. 6 or 7%. So I just own the shares of that and then write calls against it. And you can see we've done pretty well in Verizon. It's continued to just print money for us. And then ExxonMobil, with oil being up, it actually dropped a little bit. ExxonMobil, after they had earnings, I've got to read into that and see. They had earnings on 4/26, so later in the week, and there was a drop. But you can see we're still at 117, so we're above our 115 short strike, and earnings has already been announced. So I'm going to stay long right here with ExxonMobil. And if we sort here, these are the positions that I have on. If we sort by earnings, you can see next week we've got SoFi coming out on the 29th. So that is tomorrow, Monday, before the bell. Oh, wow. Okay. So we're too late for a pre-earnings trade, but I've got enough on in SoFi right now. 9, 10, 11. 14 long calls. So that'll be interesting. That's going to move tomorrow. I suspect that they'll be profitable and beat, but we will see. PayPal's got earnings on Tuesday, along with Amazon, AMD after the bell, and then Square on the 2nd, and DraftKings on the 2nd. And then we've got the following week, Palantir, Airbnb. So a lot of earnings coming out. And if you go here on Tastytrade, you can just sort by earnings, all earnings. And we've got the dates here, and you can see all these stocks that have earnings. We've got American Tower Company, GE Healthcare next week. All kinds of companies were in earnings season. There's Amazon, but keep your eyes out. Should be a big week for trading. All right, guys, I put a link down below for the free options workshop. Be sure and grab that. Join Moomoo, get your free stocks, leave a comment, ask a question. I answer every one. Remember to hit like and subscribe. Thanks for watching. I'll see you in the next one.